Hello, everyone. Welcome to Community CPA's 3 p.m. afternoon webinar. How are you all doing? So glad that I see some of you. You know, every time I wonder to myself, like, who is going to listen to this topic? I'll find, surprisingly, there are quite a few people who will listen to this section because it's very useful. The way we put the webinars together, folks, is really because of the questions coming from our clients or just people who calling the office. Hey, I have a question. So that's how we come up with these information to teach. So today's topic is related to real estate. So if you are a real estate operator and you buy real estate and you rent it out, and if you're in that business or if you're in construction business, actually build property, this concept is really important. It doesn't really matter where you are. This is a universal concept. It goes from Europe to Australia, Australia back to US, and the US to Canada. So it's a concept that may be a little different by each country, just because the government will stipulate on the years of depreciation, but the theory is behind, it is all the same. So let's take a look at what I prepared for you today, and I will start sharing PowerPoint. Of course, we prepare that for you, and there is no topic we come up in our webinar that we just patch it up and without taking a deep look at it. And we have research teams in our firm, and Dr. Howe and our tax manager, Jolene, and our senior staff, Hong, and they are putting all of these things for me to talk to you about. So I really appreciate them. I want to mention their name here. And no responsibility disclaimer. So the content we have here, we studied it, and we made sure it is right in our opinion. And but if you were going to deploy our knowledge to be used for your personal filing and your decision making, please consult professionals. Come back to Community CPA, become our client, and we will provide you that knowledge with updated information. Okay, and now, and let's talk about cost segregation now. So cost segregation, just like the word suggests, it is the cost, means the money you spend on the property. Segregation means you're separating them up. So if you buy a property for $100, you want to split it up into pieces. That's called cost segregation. And who is going to do cost segregation? Are you doing cost segregation study for your own residential home? No. Cost segregation study only needed to be done for commercial buildings and also residential building, but you use it for commercial usage. Let's say you rent it out. So it is your business property, right? So here I said that who should consider cost segregation? Commercial building owners, owners who own residential rental properties. Okay, and what is the best time to consider that? When you just bought the building is a perfect time. All right, or you just renovated the building, perfect time. Or you just had a blue map and start to build the building, perfect time. So make sure that, but what if you say, well, Ying, I'm too late because I already bought my building a couple of years ago. Now I just learned cost segregation. What should I do? No problem. You can make that change. It is allowed. And the backwards, that's a 15 years. So make sure that you, if you do end up in that situation after listening to our webinar, you're like, oh no, I need to change my taxes. That's fine. And you can do that. And who should not consider cost segregation, even though it is a commercial building, even though it is the property that you bought for rent? So number one, if you are going to sell it. If you are going to sell it pretty soon, don't do that. And number two, you never owe any taxes. You don't owe taxes. And why would you care? Because the cost segregation is not creating new deduction. They're just speed up your deduction. But if you don't pay taxes, let it go on regular straight line depreciation, right? So that's why we say that you want to make sure that if you don't have tax liability, if you are going to flip your home, flip your property like that, don't do cost segregation. All right. And what is the benefit of cost segregation? Basically, let's say I use simple numbers. Okay, let's say you bought a building for $100. Let's say the building's land is $20. So you only have $80 on hand that you can depreciate. That $20 land you cannot depreciate, right? So it only appreciates. Hopefully you bought a building, the area is highly, it has a high growth chance. So your land will appreciate. You bought for $20, but hopefully by the time you sell, it's $200, right? But that $80 you bought, that can be broken down into different components, can be segregated, right? And then some of them can speed up in depreciation. So what happened to you? And if $80 is all depreciated, that means you can use the $80 to reduce your income right away. You save federal taxes, you save state taxes, and you increase your cash flow. You don't have to come up with money to pay taxes, right? So that is the benefit for cost segregation. And cost segregation typically, and would be these buildings are available to do that. Office buildings, apartment buildings, restaurant, hotel, grocery store, and recreational centers. Those are popular ones people use. And within the building, we talked about the land, right? The building structure is another one. Then you have interior and exterior component. So see right here, I said I gave you a general data, 20 to 40% of the building value is actually related to interior, exteriors component. That can be written off much quicker than building structure and the land. The land don't have any, you can't depreciate land, right? And you hear me saying that the land is really have no deduction at all. The only thing the land gonna bring you, hopefully, is appreciation. So you actually would make money out of owning that piece of land. But the building itself, yes, it would have component that you can use to deduct. So now let's look at the interior and exterior components. What are they? And you may say that, Ying, you just say that, but what are they? They are these. They are flooring, appliance, lighting, landscaping, sidewalks, parking lot. Okay, so interior, exterior. So these are the ones, right? And now, so with cost segregation and the best timing, like I mentioned to you earlier, it is actually right after you purchase. Let's say you purchase the building for $100. And that's the time you want to tell your accountant, okay, I bought your tax accountant, bought a new building, I need to depreciate. And how are you going to depreciate? If your accountant just blurb out, goes, well, yeah, it's 39 years and straight line, then they're too rigid. They didn't really have the good thinking for you. Maybe they don't even know what is cost segregation. So you want to make sure that you say that word. Can you do cost segregation for me? Is it something you can do? Or what's your suggestion? Sometimes you don't need to know all the in and out. You just need to know what question to ask. That already become a saving for you. All right. Without cost segregation, let's use an example for residential rental property. Say you bought a residential rental property without a cost segregation, and your total price divided by 37.5 years, that would be your depreciation. So in my example right here, if you bought a house for 350 and 275,000 is the building value, 75 is the land. See, we got that broken down, right? The land and the building. And you put that property in service on January the 1st, 2021. Then you were able to take depreciation of the building over 27.5 years. So if I just take 275 divided by 27.5 years, so each year I can depreciate 10,000. What do I mean when I say I can depreciate 10,000? That means, let me translate that into Chinglish, right? Remember I told you that my English is simple. I am not sophisticated, but my understanding to these tax regulations and to the tax interpretation, my way of doing it is very simple. And I have never had any clients or people who listen to me will tell me that you're so confusing. I don't know what you're talking about. Everybody tells us that you guys are so good. You know how to explain things. So listen up. The 10,000 depreciation expense means you could reduce your income by $10,000. So let's say you made a $10,000 net profit and you were about to pay $2,500 taxes on it because you made $10,000 net profit. Now we bought this building, we have 10,000. So that 10,000 depreciation expense will reverse the profit. So how much taxes do you pay? Zero. All right. So this is what we mean by depreciation expense. If you ever wonder why people, when they hear depreciation expense, the business owners just seems to be jumping up and down and you don't understand why. That's why, because they were going to not pay taxes. Depreciation expense is a legitimate, necessary, reasonable business expense. It is an expense that you can reduce your tax on. Now, if you are going, so we were talking about that building, right? Now we're going to do cost segregation for it. So we're going to figure out the value of the building, the value of interior, exterior component, and we'll identify the life of that component. Here we go. So we bought that building, remember? And it's still 350, but 75,000 is on land. So the land 75, no depreciation, right? We don't depreciate, no expense. Building structure is 150K. So how did I get that? And I probably get the estimate for getting the wall up, the structure up. All of this building structure cost 150K. Maybe it's even in my contractor's agreement. That's what they said. The structure is 150K. So 150K structure that divided by 27.5, because that is how long the building gonna last. This is the year that residential building is allowed to depreciate. So I got a 5K depreciation expense. Now sidewalk, fences, sewers, all of these things is 45,000. That is a 15 years. So I got a 3K, right? I used 45,000 divided by 15. So I got 3K. 3K depreciation expense. Appliance was 50,000. 5 years life. They're all new, 5 years. So it's 10,000. And fixture, 30,000 divided by 7 years. And then that's a 4,000 deduction. So my total reduction to income is what? My total depreciation expense in this particular calculation, I add 5K to 3K, I add 10K, 4K, so it's 22,000. Remember earlier, we said when we do not use cost segregation, I simply use 27.5 years, I got 10,000, didn't I? Because I have 275,000 divided by 27.5, so 10,000 I can reduce my income. Now, and with this cost segregation, I got 22,000. So let's sit back and imagine. So this 22,000 become my expense. So remember earlier I said that I made 10,000 net profit. And so if I did cost segregation, what happened to me? I even have $12,000 loss, didn't I? Because my depreciation is not 10,000, it's 22. So I have $12,000 loss. If I am a partnership entity structure, I bring my 12,000 to my 1040, and I would reduce my W-2 by $12,000 loss that I just had. And so if my W-2 is 12,000, I make 1,000 a month. I got 12,000. I was paying like $2,000 taxes on it. Now what is going to happen to me? I'm getting all my taxes refund back to me. Okay, so this is where I want you to link the depreciation, the word of depreciation expense to tax refund. How did that happen? That happens because it reverses my income, right? Let's look at another one. So I just was using a residential property. Where is your rental property? You did cost segregation. But what about a commercial building? Buy a commercial building, office building, and office building is 39 years depreciation, less than residential, okay? And so with 39, let's keep that in mind. So let's look at our example. Say we bought office building. Say we bought office building for community CPA, that's 480K. 390 is the building value, 80K is the land. You know, you probably ask me, oh, Ying, how did you know the land is 80K? It is allocated. Whenever you buy a property, the cost should be allocated. And there, you know, on the assessor's website, the government controlled assessor's website, it will give you the land value. So 80,000 is the land value. So I can only do depreciation stuff for $390,000. So because it's the 39-year depreciation, so isn't that true? My depreciation expense is 10K, right? 10K. Now let's go to next page. So what if we use cost segregation? Okay, so let's do this. So now we're gonna split our component. We're gonna segregate them. So the land is 90K, no depreciation. Building structure is 200K, 39 years. 200 divided 39, 5K. Depreciation expense every year. Sidewalk, fence, sewers and stuff, 60K divided by 15 years. So that's 4K. Appliances, 70,000 divided by 5 years, 14K. 60,000 fixtures divided by 7 years, that's a 9K. So if I add 5,000 plus 4,000 plus 14,000 plus 9,000, I got 22,000 depreciation expense. And versus earlier, if I don't do cost segregation, remember, I just get 10. So I got more depreciation expense again. This is where I will be, because this is a commercial building, so I will take my 22,000 depreciation expense against the income. And with that, then you reduce your taxes, right? So this is where the cost segregation concept becoming more clear to you. So one more thing I want to add to this. You know, of course, in this example, we were just so simplifying these years. These are standard years for this type of things. Sidewalk, 15 years, you can find them in the book. So they are just, those are the years, established years, is in IRS code, and it's just that how it is, okay? But what if you bought an old building? What if you bought a building that your appliances, that is 70K, but you know, you allocated 70K on the appliances, that's you bought it. But once you start taking over the building, you realize that it is all has to be replaced for whatever reason. Maybe you found mold, maybe whatever happened. So it is like it need to be written off. if that happened to you, and you would do cost segregation, and you will have 70K as your expenses, but not 14K. Because when you bought the building, the life of that component can be determined independently. Obviously, you will say that, Ying, if you say that, anybody can go in and say that doesn't worth any years, so I'm writing off the whole thing. And of course, if you are making that determination to write off the whole things, you have to remember, IRS is not gonna come over to you and then look at your condition, help you to decide. But what IRS says is, it is need to be reasonable, need to be necessary. So reasonableness, you have to prove that, right? I would, if I were you and getting ready to write off that whole thing, I would take a picture and getting a third-party opinion on that and how many years this is gonna last, and save that as my backup for everything I do on my tax return. So it is really, I always think that the business owners who are really organized in their steps of taking the business forward, and they know that to talk to to our firm. We have a company that purchased a huge property, and we actually help to hire a third-party cost segregation company to come in to do the segregation for them. And obviously, if I give up everything I do, I can go to do that as well. But we knew that it is so much more prudent for them to have a third-party report that done professionally and with all the backup. Then our tax people will be much more efficient in getting the right year depreciated, getting you the write-off that you deserve. So with that, I want to say that every time, and you as a business owner and thinking that you just have to borrow money to pay taxes. You just borrowed a whole bunch of money, bought the building, now you borrow money to pay taxes. Maybe the question to you is, did you listen to Community CPA's webinar to really understand cost segregation? If you did not, time to do that, right? So this is where we bring to you knowledge that will save you a lot of money. And remember, you can always come to YouTube channel. Be sure to subscribe to our channel and ring the bell. So that way the notification will go to you. If you like our webinar, please send it over to your friend and tell them that we are here. And a lot of times we say to our client that there will never be enough time on our hand to educate everyone face to face. This platform is so great. You can learn. So when you come in to work with us, your question will be so precise and the answer from us will be so efficient. So we increase the productivities, we get you in and out, you don't waste time, but yet you got the best service that you can get and the knowledge that you deserve to have. And I will talk to you again. And Tuesday, 3 p.m. is my time. Saturday, 3 p.m. is also my time. I'll see you again. Bye-bye.